I have the pleasure of working with such amazing people. Melinda, one of my clients, mentioned that my experience with the barista was an A plus. Matthew was great in explaining everything to me, and I never felt pressured. 100. So that's really cool. And then Terry, when I really took the time to listen to Matthew at his presentation, I had a very good vibe from him. I knew he was going to be the one that I could trust to be there for me and my family. I will let others know that I have no doubt. I would recommend to others. Thank you so much, Terry. And then Carla and the husband. We really enjoy working with Matthew Ponder. We had a lot of financial and retirement questions. Matthew was very patient in with answering our questions and explaining our many options going forward. He was very knowledgeable and a pleasure to work with. And I love working with the right people, and that makes such a huge difference. All right. Any questions? Any questions? What are your questions? Please type them in now. I'm sure you wrote down a lot of good notes. A lot of good notes. I hope all this is coming to fruition. Concept is there. Everything you wanted to know is here. Now let me answer. Let me ask. Here's a question. Well, actually, more of a statement. I should say is this sounds too good to be true. Now, what makes you say that? Now, when I hear that, what makes you say that? Now, it does sound too good to be true. Now, that would probably be true if everyone could have it. Meaning, is that what qualification, eligibility? Remember, this is governed. First, you have to be eligible. You need the money. Okay, you can't put in 100 bucks a month, 200, 500 a month, 800 a month. That's not going to work, especially at your starting age. And if you're the kind of clients I work with that are the 50 and above crowd, 40, I would say, but 50 and above crowd, anything less than $1,000 is not going to be well worth the time. And then this vehicle is not going to work with little money. You need money to put into the plan. It's such a robust engine that it needs money. Okay, and then you have to be eligible, medical requirements. So it sounds too good to be true. However, that's been it's that's been dispelled because of lack of education, wrong people, wrong type of person for the vehicle. So it's not a good fit for everyone, as you know. Um, Now, if you want the certain outcomes of what you know to be true in this vehicle, then it doesn't matter what vehicle that you're using. But it's not a good fit for everyone. Uh, but if it did apply to everybody, then I would probably agree with you, and if that makes sense. Now, here's another question: Is why haven't I heard about this before? And it's a good question if you haven't heard of it before. And just like anything, you don't know what you don't know. So it's not. This is not like a 401k where it's just easily accessible um, through large financial institutions, where all of society goes to. You have to go to specialists, so you got to find them out, or they find you. So it's not like a 401k where anyone can contribute into it. This actually needs you need to qualify for it and be eligible for it. Um, However, it's not a new concept. You know, it's been around since the late 90s and started in 1990 was in one form, universal life. Then it progressed into indexed in 95. And even though you haven't heard of it, a lot of people, a lot of individuals are using it. Okay, so it's just an updated version of what came out in 1990. We can talk about whole life, but that's more for geared towards the death benefit, less cash. But that's very old and it's been around for over 200 years. But there's more robust engines, just like what you know of right now with this option, much more robust for income and all the good benefits, what you're getting into the plan. Uh, Now, I should mention this. Now, prior to this industry, I was in fashion. Remember, now in fashion, I did fashion marketing. So just like everyone else, we're only exposed to whatever our employers offer us. So how could we possibly even be exposed to anything else outside of that? unless you're doing your own research, looking for other options outside of work, just like what you've done when you came here. Because as you know, this money's not taught in schools, so we don't learn this stuff growing up. Here's an interesting question: Is how is my money safe? How do I know my money's safe with this provider? Which is a it's a good question, and I'm glad that you thought of that because it sounds like you're looking for some reassurance of the safety of your money. Now, is that why you're asking the question? It's kind of like think of FDIC when we inside my notepad. Remember, I shared my notepad, and I mentioned the four places to invest. The bank. Remember FDIC. We go to the FDIC for liquidity. Uh, it's FDIC insured. So what's the I in FDIC? Insurance. Now, if you didn't know that, that's totally okay. For a moment, long time ago, before I came into the space, I didn't know either. Now, as you know, obviously it's related to the banks and it's the Federal Deposit Insurance Corporation. That insures our money, typically about up to 250,000. Anything above that is at your own risk. So in this scenario, you're actually cutting out the middleman. You're not even doing business with the banks. Okay, the banks are the middleman. You're actually bypassing them, and you're putting your money directly with the provider, with the help of myself and our and others on our team to accommodate, help you set it up. Okay. Now, does that make sense so far? Now, let me explain it another way as well. So every single time, not sure if you notice, okay, but what is car insurance? Oh, well, what car insurance do you have? Just type it in. USAA, Geico, AAA. It's all the same industry, but it's car insurance. Okay, it doesn't matter. So anytime an insurer takes a premium, okay, from a client or a consumer, a portion of that premium it must be allocated into the state guarantee fund. Okay, in financial services, in particular, insurance companies, they're the most solvent business and entities on earth. So, for example, let's say your USAA policy is going to issue you a $500,000 car insurance policy. Okay, 500,000, half a million. They can't they can't write you an IOU, you know, if you get into a major car accident. They can't say I owe you. Okay, they can't do that. They have to give you literally $500,000 of cash to you, okay? And they must show that $500,000 on their books before they can issue you out that half a million dollars, okay? It's got to be liquid first in liquid form. Does that make sense? Okay. So when it's shown in the books, then they can write a check for 500 grand. Okay. Every single state in America, they have their own separate guarantee fund. Okay. A guaranteed fund. So in the event of Armageddon, let's take that trail. So if the worst case scenario happens, they go bankrupt, corruption, whatever your mind goes to as far as Armageddon, whatever the worst case scenario is to you, two things take are going to take place. First of all, so the first thing is that the commissioner of the Department of Insurance for that state has a board of insurers of insurance companies, and if they get into trouble, they have to have a fund of money to secure your money, which is first mandatory and it's regulatory in every single state in America to basically just absolve any liabilities from a company that's even close to insolvency. Number two, if that doesn't work, typically there's an element of what's called a bailout, if you will, meaning every single large corporation, let's say in the S&P 500, for example, every company listed in the S&P 500, they have their own insurer backing their bottom line. And also they will always get bought out because it affects them, affects the insurance industry as well if a large company goes under. Does that make sense? So it's the same with insurance companies. insurance companies have insurance on themselves. All right. Now, as you remember AIG back in 2008? Remember when the market crashed and they almost lost, no, actually, they almost went bankrupt. Remember that? Now, the reason they did not go bankrupt, and they should have, but they did not, is because the government found out is that if this one company, imagine that one company has a ton of retirement plans, pension plans, life insurance plans, all kinds of investments, all intertwined in just this one company. Now, if that company was allowed to fail, people, millions, thousands, hundreds of thousands of people would have experienced a 2008, probably 3 to 4 times, maybe 5 times worse. Does that make sense? So, anytime you put money into a vehicle like this, an insurance based instrument, it's even more secure than the bank. Now, any major insurer that's a significant player in the industry, they have never gone bankrupt because of that. We're talking about insurance companies that have been around since 1886, which means they've made it through the Depression in the late 1800s. They made it through the crash of 1909. They made it through the Great Depression in the early 1930s. They made it through the dot-com bubble, the latest real estate crisis, and who knows what else is going to happen in the future. But it doesn't get any more solid in terms of where you put your money. So I hope that answers your reinsurance question. I'm not even sure if this resonates with you at all. It's okay if it doesn't. Not even sure if your specific scenario would be a good fit yet. We still have to figure out and learn a little bit more about your circumstances first before you would be in a position to even consider making any type of adjustments. Does that make sense? Tax-free side of finance, it doesn't apply to everyone, and that's why we're very transparent on every level. Go to the next section and complete the retirement review assessment. All right. And I'll see you there. Thank you so much.